Okay, Mo Sunday service. Welcome. Today we're going to be primarily talking about 5 different order types on ThinkOrSwim, in addition to what we usually talk about in terms of the macro picture and what's happening next week. For all the YouTubers out there, this is for informational purposes only. Trading is risky. I am not a financial advisor. You should refer all of your trades and investments to your financial advisors and professionals. Once again, this is just for informational and educational purposes only. So, with that said, let's get started. Um, Let me go to. Here's the nice title card I created for you guys. Trying to stay consistent. Let's go to market news for this week. All right, so I'm gonna keep starting out.
Love
Uh,
it.
it says Francisco coming in.
Yeah, that's my people.
Yep. All right, so this week, major economic news. We go over this first just to figure out if you are trading this week, this coming week, what could potentially derail your trade, your investment, etc. What's going to move the market. Last week was crazy with the Fed speaking and CPI. There was a ton of chop everywhere. Things going up, things going down, depending on the numbers. CPI, though, that came out, the inflation readings came out relatively light, which I think is good overall for the market because likely that's going to cause the Fed to start lowering interest rates soon. Apparently, on Monday, this man is speaking again. I don't know why he keeps talking because it usually leads to market volatility. And actually, I could say his testimony last week with Congress wasn't that bad in terms of what caused volatility. What caused a lot of the volatility was CPI and the bank earnings that came out on Friday. But essentially, we got the Fed speaking on Monday. This is 12 p.m. Eastern. So if you're trading anything around 9 a.m., uh, he could potentially move the market depending on what he says. You got some retail sales that are probably going to affect like stocks like Amazon, Target, Costco, things of that nature. Got another Fed speaker later that afternoon. Uh, just looking jobless claims. As we know, that's the second factor that the Fed is supposed to influence. Is important for them to keep us close to full employment. So if we see jobless claims rise, that's probably going to be bullish for the stock market because there's a chance that if jobs data is weak, that's going to lead the Fed to stimulate the economy by cutting interest rates. So that's going to be bullish for stocks. So right now the forecast is that we're going to see 228,000 jobless claims. If we see like 250,000, that's going to be more bullish for the stock market. So bad news is good news as of right now. So if we see bad news in the job market, then stocks are probably going to like that. And then Friday, you got some other Fed speakers as well. They're not as influential as Chairman Powell, but they do have some potential to move the market when they speak. So, especially if you're day trading around these particular speakers, sometimes it's best to trade and get out before they start talking, or wait to get in until after they start talking. You know, to figure out which way they're going to move the market. So we're talking about earnings next week. We're still in the bank earnings. We got Goldman Sachs, BlackRock. So and just to look at earnings from Friday of last week, you had JP Morgan and Chase, Wells Fargo and Citi. By far, JP Morgan and Chase's earnings were reported better earnings than Wells Fargo and Citigroup. And here comes my daughter. All right, so Monday, we got Goldman Sachs. Tuesday, you got Bank of America, Morgan Stanley, and Charles Schwab. Some more financial stocks. Wednesday, you got ASML. You know, I love that company from the semis. Johnson and Johnson. Thursday, you got TSM, Netflix. So we are kind of starting to get into like the beginnings of earnings for some influential stocks. So TSM, Netflix. And then Friday, you got American Express, Schlumberger, which is in oil and gas. So we're at like the tip of earning seasons, specifically for like the bank stocks but and financial stocks, but you also got a couple of influential chip stocks and ASML, healthcare, Johnson and Johnson, TSM, and then Netflix that are also relatively influential for the market too. So those are things to kind of be watching out for. As I told you, what I've seen that's worked over the last few quarters, I might try to do that with some of these stocks that are reporting towards the end of the week. Let's say like an Amex or a TSM or a Netflix. I've seen that generally a week before their earnings, they will pop, you know? So there's usually a run up into the earnings and then a sell off a lot of times after the earnings. So that's if just, and I usually don't like to talk too much strategy on here, more about like execution and education. But I have been seeing that working. So if you can see a pullback on TSM or Netflix on Monday, that might be a good time to get in because they're usually going to run a couple of days into the earnings, and then a lot of people tend to sell them off right before earnings. You know. All right, and then just looking at the sectors broadly, I like to use this app or website called Koifin, which gives you some information specifically about sectors and how well they are performing. And so over the last month, and really this got affected last week, KRE took off. Those are the regional banks. Gold took off, and we still got XLY, which is Tesla and Amazon primarily, and with a little bit of Home Depot. The metals have kind of come up. You still got chips that are up and tech that's up. But mostly, just to show you we're still kind of in a bull market. Over the last month, there's really only been one negative sector, which has been oil and gas producers. But everything else and energy, but no, even energy is positive now. So we're still in a bull market. Everything still seems to be relatively healthy and heading towards like higher highs right now, with the regional banks over the last month and gold leading with, some consumer discretionary, metals and mining, chips, and then tech, which has been strong. Chips and tech have been strong. If you look over the last quarter, chips and tech have been the hottest over the last quarter, with the regional banks, utilities, and gold kind of trailing. So once again, if I'm looking if I'm looking for strength and what's likely going to continue by looking at a 3 month or 1 month sector performance, I'm looking at chips, I'm looking at XLK, tech, I'm looking at gold, and I even like consumer discretionary. I don't usually trade real estate that much, but even utilities look pretty nice. Over the last month, in terms of what's trending, it's kind of similar, maybe with like XLY being in there, but XLY going up has been primarily due to Tesla blasting off over the last like few days, right? Because that's heavily weighted in XLY. Amazon has been pretty much stuck at 200, but Tesla's been blasting off recently. So that's why I think XLY has been kind of an outperformer in comparison, right? But in general, things look relatively strong going into this next earnings season, right? And so some of these earnings releases could change that. Like if ASML and TSM report terrible earnings, there's a good chance that the chip sector might come down. But I doubt that's going to happen, just because of how NVIDIA has been doing crazy numbers, and specifically those two companies are specifically connected to NVIDIA, right? And I don't think anyone at the moment thinks that they're going to be producing less chips anytime soon, right? All right, so with that being said, that's kind of our macro picture for next week. We got a few people reporting earnings. You got Fed Chair Powell speaking on Monday. You got jobless claims reporting on Thursday. And at the end of the week, you got some chips and Netflix that are reporting, right? That could potentially move the market. Netflix is not extremely heavily weighted in XLC like Google and Meta are, but Netflix could affect XLC, which could also affect Google and Meta as well because it's in the communication stocks, right? Babe, what are you doing?
I want to brush Mama, so
Okay. All right, so let's get in. So the main topic today is like, here are the 5 order types that you should be using on ThinkOrSwim. Specifically, if you're beginning, intermediate trading, like we're gonna go over the basic ones first. We kind of went over some of them last week, but I kind of wanted to give you some more information on like the basic orders that you should be using and what they mean, and then some of the more sophisticated orders, and then even like I've shown you how I like even put triggers on my trade that are time based or price based as well. Hold on, Mireya, I need you to be quiet, please. All right. So if we just go straight to ThinkOrSwim, to their website, they kind of tell you. I think this is the best educational resource to tell you what the different types of orders, because they spell it out. The 5 that we're going to be talking about are going to be market orders, which seek execution at the next available price. Limit orders, which seek execution at the price you specify or better. It's fine, baby. And then stop orders, which indicates you want your stop order to become a market order once a specific activation price has been reached. And they indicate here there's no guarantee that the execution price will be equal to or near the activation price. It's just that when you activate it, it's just telling the bots to sell at whatever price you can sell it at right now. Get me out of this trade. All right. And then the other 2 we're going to go over that I use all the time is going to be first trigger sequence. So in this case, the first order entered in the order entry screen triggers a series of up to 7 more orders that are not filled until the next order in the queue is filled. And then another one that I use is first triggers OCO, or the first triggers an order canceling order. The first order in the order entry screen triggers an OCO order. One cancels the other. For example, if you first buy 100 shares of stock, when the order is filled, it triggers an OCO for your profit stop and a stop loss. So if one of those hits, it's gonna cancel the other order. So when we go into the platform, let me stop sharing that. What happened? Okay, so can everyone see my screen?
Yes.
Yeah,
All right.
you can.
So right now I have QQQ up, which is an ETF that's mostly like a NASDAQ ETF, right? So let's say I wanted to buy 100 shares of QQQ. The easiest way for me to do that if I'm on the screen is to go up to this price right here, click it, and then click buy. When I do that, you're going to see at the bottom of this screen a buy order for 100 shares or whatever you have your default on your particular platform. Mine is 100 shares. And then you're going to have the symbol here, the type of instrument. This is an ETF, not a stock, right? The price, and then your type of order is going to be here underneath order, right? It defaults to a limit order. Then you're going to have the time and force. Is this good just for today, or good GTC means till canceled? EXT means even in extended hours, which means after the market closes. There are certain things like QQQ and other instruments that trade even after the standard stock market hours. So if it's something like this that trades after hours, you might also want your order to stay in force after hours, right? So you could do good till canceled and extended hours as well. And so these are the major things that you're going to be putting in. Don't really worry so much about instruction or the exchange. You want the best exchange just so you can get your fill. And the platform is usually using one of two or if not three exchanges, right? But you're just going to keep that the same. The things that I'm usually changing here are going to be the amount of shares, the price, the type of order, and the time in force, as well as this lock here as well. Because if you lock it, it's going to lock the price at whatever it is that you put in here rather than moving with the stock price. So let's say the stock price is 495.10, which is what it is right now in aftermarket hours, right? And if say it keeps moving up and down, if you keep this unlocked, then that price is going to keep moving based upon the movement of the stock price, right? And we're in aftermarket right now. The market is closed. So really the stock price is going to be closer to the middle of the bid and the ask right now, which is why you see 495.10 in here rather than this current price. So, but if you keep this unlocked, if this moves up to 496, then you're going to see the price here move to 496. If it moves down to 494, you're going to see the price here move down to 494 if you keep this unlocked. If you lock it, it's just going to lock the price that you're putting in right here in this price area right here, right? So specifically though, in terms of order type, so if we start with a market order, if you wanted to do a market order, you would click in this box and click market. So what is that going to do? When you enter a market order, like if we were to click confirm and send, what it's going to do is get you in at the best available price right now. It's not going to be discretionary based upon what price you really want to get in. Let's say if you wanted to get in at 494.82. If you place a market order, it is not going to get you in at 494.82. It's going to get you in at the highest or the most available price, which is going to be this ask right here. It's what people are currently selling these shares for. So you're going to get filled close to 495.10 if you click on a market order, right? Does that make sense? So that's the first type of order, is a market order. You guys feel what I'm saying when I say that?
I do.
Right. So that's the first order. It's going to get you in at the worst price. So with QQQ, it's not going to make that big of a difference using a market order, because the difference between the ask, what people are currently selling this for, 495.10, and the bid, what people are currently bidding for this, is 495.07. So that's 3 cents. So, Mireya, stop. So if you have a 3 cent difference, even 3 cents with 100 shares, that's $3, right? So losing $3 by slapping the ask or using a market order isn't going to make a big difference on QQQ. The example that I used last week was XLI. XLI, even this is moved forward. Can I find something that's crazy? Let's say Unity. No, even Unity is traded well. What's something? XLU. No, the market is pretty liquid right now. Let's see, XLF is usually, that's pretty good too. Let's go back to XLI. That's the worst. So if I used a market order to get into XLI, right? So click that, click buy, XLI. And if I used a market order to get in here, it's going to fill me at 124.25. But a better price to get into XLI would be closer to 123.50, which is where people are currently bidding for the stock. So if you're trying to use a scalpel, like if you're trying to be a sniper and get in for exact prices, a market order is not the order to use unless you're trading something that's extremely liquid, like a SPY, which is 10 cents apart, or QQQ, which is even better. It's 3 cents apart, where a market order isn't going to make that big of a difference. Generally, when you're trying to get into a trade, you want to be using a limit order. And this is why the platform tends to default to a limit order. A limit order tells it to fill this particular stock at your price or better. So in this instance, if I wanted QQQ if I wanted to buy QQQ at $494.82, right? Let me click that. Bam. Instead of leaving this price in here at $495.10, I would put in $494.82. And then if I leave this here for the day, and I'll actually confirm and send this one,
Daddy?
what it's going to do is it's going to have this little green line here. Hold on. Yes, baby. I'm in the middle of... Yes, but you have to ask your mother. I'm in the middle of a meeting.
But she's napping.
Well, then go wake her up. I'm in the middle of a meeting, or you have to wait. All right. So right here, I've entered that order, but you see it's sitting out there. It has not filled. If it filled, then this thing would go off, right? And then it'll send me an alert that says you bought 100 shares at $494.82. And if I hover over it, you see that little gray box underneath telling me what this means. Buy 100 QQQ at $494.82 to open the trade. In those brackets, it says to open. So until this hits $494.82, this order will not be filled. So essentially, it's just waiting for it to hit this particular price. So generally, you're going to put in a limit order for lower than what the current price of the stock is. And generally, that's how most people trade, is they're waiting for a stock to hit a price or hit a certain level down before they want to enter that particular trade. So this essentially right now, the ask or the true trading price for QQQ is probably somewhere between $495.07 and $495.10, right? And so we're higher than what the mark is, or what QQQ closed at on Friday. So if I told the platform, hey, wait until this hits $494.82 to fill it, I would use a limit order. And then I could enter that limit order, and then it would essentially wait until the price dropped to $494.82 to fill this order when the market is actually open, right? And then I can just click the X button to cancel that. Does that make sense? That's the second order we're talking about, our limit orders, from an execution standpoint.
Yep.
DeAndre?
Can you go over it one more time for me, please?
Yes, that's what I'm talking about. See, that's why. No, for real though. That's why I'm asking though, because so let's make this something like let's say the current price of QQQ is 600, right? Let's go way out of bounds, right? Let's say QQQ is way up at 600, but you decide, hey, I only want to buy it if it comes down to $494.82. So
Okay.
if you want to wait until it hits $494.82 to buy QQQ, all you have to do is punch in that price. Right. And I'll give this, and let's go to HD, because we used this example the other day. I have a price that I want to buy HD at. I want to buy HD if it gets to 325. I said that a couple of weeks ago, right? So if Home Depot, and it might have took off on me, should have bought it higher. But if I want to buy HD if it gets to 325, and the price is currently around $360, so I could click buy, and then it's going to come down here. 100 units or 100 shares of Home Depot, it's a stock, and then the current stock price is $360.36. But I don't want to buy it up here. But I don't want to be looking at my screen, let's say if I'm at work, or I know I want to buy it at 325, but I just want to put the order out there and so that it'll execute even if I'm busy and I can't look at the screen, right? I can't go pull up my laptop. So what I could do is just punch in 325 here. Oh, and then press confirm and send. And now, if Home Depot during market hours drops the 325, it'll just fill that order for 100 shares. That's what a limit order does.
Okay.
So
All right.
let's say on Monday, hypothetically, this is close to 330. I see it open up at 330, but I'm like, man, if it gets to 325, I want to buy. But I don't want to have to pull up my phone or pull up my screen. If it gets there, I know I want to buy at that level. So I could just sit an order out there, right? And that's what I'm doing. I'm sitting an order out there. So if it drops to that, it's automatically going to fill me. So that's a limit order. Even with day trading, it's the same thing, right? If we go to a 5-minute chart, let's do this with the keys. We go to a 5-minute chart, and let's say it's up here like close to $500. But I'm like, man, if it gets down to 494, I want to buy it. The same thing. I could just come down here, 494. And right there, it'll trigger. So if I see here, hey, I want to buy this if it comes down to 494, then I could just set an order out there and wait for it to trigger. It may not ever trigger. It may not ever get down there. But if it does, it'll automatically get me into the trade without me having to fiddle with all these buttons. And then what you'll understand is, like, I set up my trades ahead of time, especially if I'm day trading on like a 5-minute chart and I know a particular level that I want it to hit before like it goes up. I'm going to set this up before it gets there, because if I'm trying to set this up right as it gets there, I might miss the trade. Because sometimes these things don't linger for 5 to 10 minutes. Sometimes they linger for a few seconds and then they bounce back up. Right? Isaac, like with Nvidia last week, that's a key example, right? Sometimes you hit that price and it's there for like a minute or two max, and then it's heading back up. So if you weren't ready with your order, you fiddling around with your trades, you don't know how to enter trades quickly, then you might miss a good idea, you know? So
Yes, sir.
it's not just about having a good idea. It's also about being able to execute really quickly. If you're not able to execute a trade really quickly, that trade's going to miss you, especially with day trading. If you're doing swing trading or investing, that's not as big of a problem, because generally you're not at small time frames like this where you're trying to make money off $1 or $2 worth of movement in the stock. But if you're day trading, like, you need to be able to execute, like, and just imagine, even with like a news trade, let's say you're watching CNN or NBC or Fox or whatever you watch, you know, let's say you're watching a news and you hear that the president was shot, or attempted assassination, which just recently happened. And let's say you believe that that's going to move a particular stock or move a particular ETF. Like September 11th happens, Israel goes to war with Palestine, right? And you go, hey, Israel goes to war with Palestine, oil stocks are probably going to go up, defense stocks are going to probably go up, right? If you got your game plan, if you don't know how to execute quickly, that trade could be gone by the time you have the idea, right? So I know, like, hey, if, or you hear that another Boeing plane crashes, right, and you hear it in the airport right as before it even gets on the news, I'm gonna go short Boeing stock, right? And I need to know how to do that quickly. I can't be waiting and figure out how I'm going to do it. I need to go straight to the stock, figure out exactly how I'm going to short the thing, and then enter that trade immediately before everyone else figures out this news, so that I'm on the right side of it before everyone else figures it out. right? That's just an example. If you're trading around news-based stuff, you're somebody that watches the news all the time, you happen to be in an airport where something crashes and you figure out what jetliner it was so that you can go short the stock before everyone else does. But you got to be able to execute your trade really quickly, right? So, same thing. So if we're talking about shorting a stock, using a limit order to short the stock, right? If you wanted to sell, if this got to, let's say, 501, which is where my ATR is, right? My average true range. So if I wanted to sell when this got to 501, then it's going to be the exact opposite. It's going to wait until this hits 501 before it executes. So if I confirm and send that, right, and you'll see that one hits there, which means short QQQ if it hits 501. And then so it's sitting out there waiting for this to come up above 501. And once it hits 501, then it's going to sell QQQ short. And then I'm going to be short shares of QQQ, right? So it works the same way, but opposite when you're selling shares. The limit order is going to try and sell shares of QQQ when it's above 501 rather than below it. Right? Does that make sense too? Before we leave limit orders.
Yep.
DeAndre?
That does make sense.
Okay.
That does make sense.
All right. So those are limit orders. So we talked about market orders. We talked about limit orders. The next most important order that I think that every beginner should know should be stop losses. Right? So let's say you're already in a trade and you own 100 shares of QQQ already. Or let me see, what's something I own right now? Do I own any shares of anything right now or just leaps? I do own some shares of QQQ. All right. So let's say you own some shares of QQQ already and you're like, hey, if this gets to a certain level, I want to get out of this trade. So let's say that level is the 50 moving average, which is around 469.50 right now, right? So let's say if your hypothesis, hey, if QQQ gets below 469.50, I want to sell all of my shares. And then if I'm at work, I don't want to have to look at this to sell my shares because I might be in a meeting. I might be on the line somewhere. I can't get away. I'd be with a patient. I can't get away from that and go sell my shares even though an alert's going off telling me that I should sell right now. Well, what you could do is, and let's go to my retirement account. I own 10 shares of QQQ in my retirement. So I could, let me do this the easy way. Go to sell. Put in 10 shares. And then the order would be a stop. That's a stop loss. I always recommend with stop losses, unless you're day trading, always make them good till canceled. If you leave this on at day, you're going to think that you put a stop loss on your trade, and at the end of the day, that stop loss is going to go away. So if this is on a long-term investment position or a long-term swing, I would advise you to put it on good till canceled so that no matter what, it's going to be on until you cancel the stop loss rather than it going away at the end of the day. Any trade
And it's
that
usually edited as GTC, right? GTC most of the time.
GTC,
Yeah.
but it defaults to day. At least that's what I've seen. So you don't want to keep this, especially on a stop loss. Like if this is on a longer position, a swing position, and you know absolutely I want to sell when it gets down to this level, put it on GTC. I'm even certain that you can go to your settings and have your platform default to GTC on all of your orders. But I don't like to put this on, especially when I'm buying stuff, because generally when I'm buying things, I'm only buying at that level for that day. Because you see with these moving averages, these are dynamic. So what could have been a level the day before might be slightly higher the next day or slightly lower the next day. So usually for my buy orders, I only want them good for the day. But for my stop losses, I usually want that on good till cancel unless it's a day trade where I'm watching it the entire day anyway. And then I'm going to set alerts for myself to get in or out of a trade based upon my alerts, which are going to act as my stop losses. But when you're first getting started, I would suggest just putting on good till canceled on your stop losses, right? And then keep this on stop. And then it could be standard, or you could base it upon the ask or the mark. The mark is essentially this right here, and then the ask price is this, and you'll see they're slightly different, which is why you can kind of base your stop loss on whichever number. If you base it at the ask, I don't like doing that because that's probably going to be the highest price you could sell it for. So I would rather base my stop loss, just keep it on standard or leave it at the mark rather than putting it at the ask. If you're putting it at the ask, then you're probably going to get out at a lower price than an even lower price than what you were anticipating. And really what this says is, like, so let's say if I place my stop at, let's say a nice number, what did I say, 469.50, which would tell the computer or the algorithm inside of ThinkOrSwim, when the price of this gets to 469 or 465.90, sell at whatever you can sell it at, which is going to be the bid. So it would be at 490 or whatever the bid is at the time that it reaches that particular price, right? So it's not going to get you out directly at 465.90. It's going to get you out at whatever price it can sell those shares for at that time. Right now, there's only a 3-cent spread. So if this spread stays the same, chances are it's going to get you out at like 469.87 at the worst case. It's easier to do stop market orders on highly liquid stocks. But if you were to do that same sort of stop order on an XLI or something that's not extremely liquid, I'm still trying to find something that's crazy. Oh, Deere is usually illiquid. Yeah, like a John Deere, where the spread is $1.10 apart, 365.84 minus 364.74. It's probably going to get you out closer to this bid, so you could lose a whole $1.10 if you're using a stop loss on an instrument that isn't that liquid. So that's why some people don't use stop losses. They'll just use limit orders and sell. But if the price is tanking fast, you might lose some money there doing that as well. So, but if you want to get out and you don't have an opportunity to look at the stock, it's best to set a stop loss. So if I'm not looking, if my computer's down, if my internet's down or whatever, it's just automatically going to get me out if the stock tanks to a particular price. And I just always advocate any beginning traders to always use the stop loss. And that way it keeps your emotions out of it too. A lot of times, for some reason, I don't know why humans are this way. When we get up on a trade, we'll sell fast, right? We won't let our winners run. We'll sell quickly. But when we get down on a trade, let's say if you told yourself, hey, if I become down on this trade more than 20%, I'm going to get out. We're more likely to hold things that are down 20% than keep things that are up 20%. And I don't know why, right?
For sure. My problem for sure.
Yeah. So try to switch those two things. Be more likely to hold something that's up 20%. And when something's down 20%, if that was your stop loss, cut it. And having an automated stop loss, it's robotic, right? So you keep your emotion out of it. You keep your psychology out of it if you automatically set your stop. So if you have a problem with that, of holding on too long to your losers, when you told yourself, hey, if I lose more than $5 on this or $10 or $100 or whatever it is, your number or your percentage, set a stop loss for that amount. If you set a stop loss for that amount, it'll prevent you from getting overly emotional when you're losing money. And try to flip that where if you're up, maybe sell a portion of it, but let it run. Don't be, in order for you to make up for the losses that you have to have your winners run longer than you anticipated, especially when you get one of those winners that goes in your direction really quickly. Let that thing run. And from a stop standpoint, when you say, hey, like on DoorDash and HubSpot last week, it hit my price, I got out. HubSpot, they released terrible news indicating that Google is no longer interested in purchasing them, right? Or like the talks fell through. When that happened, I think I got out close to, because my stop was somewhere around here. I got out right then and there. And then all of this move right there missed me. I didn't take that loss. I took a couple $300 loss, which was because I was trying to make like $3,000 on the trade with my 10-to-1 risk reward ratio. And then as soon as it hit that point, I just got out, right? And I'm not going to wait for it to go all the way down here. I'm not going to get emotional. I'm not going to hope. My thesis was that it was going to hold at this 200-day moving average. Once it fell too far below that 200-day moving average, my thesis is wrong. I'm out of the trade. And I'm going to put that capital to work, put it to better use somewhere else that's likely going to hold my thesis. But I'm out, right? I'm not going to wait for this. And me and Isaac were talking about getting back in on Friday. I really want this level right here at 455. If it ever gets back down there again, I'm probably going to buy it again. But because I do think it's relatively exhausted, and I still think it's a decent stock, but I'm out, right? And that saved me $1,000 by just getting out when I said I was going to get out if things went wrong. And let's look at Dash too. Same thing. I want a Dash to hold this 200. And I was willing to hold it unless it went below these two bottoms right here. As soon as it went below that bottom, I just got out. My thesis is wrong. It's been holding at 110 consistently, which is around where I got it. I was willing to hold it until it made a new low. It made a new low. I'm out. My thesis is wrong. And it's still consolidating. It could come back up, but I wasn't really willing to lose more than $300 to $400 on that trade. So I'm out. That's it. Just trade like a robot. How would a computer trade? That's how a computer would trade. I gave it parameters. It hit those parameters, so I'm out. I'm not going to hope that it goes back up. I'm just going to direct my attention to another stock or wait for it to get back to where I need it to be. Disney did the same thing, and I'm showing you all my losers right now, right? I said Disney. I love picking up things around that 200 moving average. I picked up Disney a while back at a 200 moving average, and I think on this day it dropped below 100. And I told you I'd be scared if it drops below 100. It did. I got out. I'm not waiting. I'll lose a couple $100 in an attempt to make a few thousand. That's just what I'll do. So, but I don't want to. If I would have held Disney, I still would have been down, right? If I would have held HubSpot, I still would have been down. If I would have held Dash is coming back a little bit, but I still would have been down. I would rather use that money and get into another trade, get into something that looks stronger than these names. Specifically, HD was what I was looking at, but it never got down to my level, And Airbnb was the other one that we had been like, oh, actually Airbnb is back, right? So, actually, this might be Monday's trade. Right? I like Airbnb, right? I love what it's been doing. It's around that 200. It came back. So, yeah. It would be ideal if it came right down here again to grab it, but it's been hovering at that 200. It hasn't hit a new low. It hasn't gone beneath 140, which would be like the low. And so I would try to get in around here, or if it came a little bit below the 200, and then set my stop right here beneath that low. Right? So that's a stop loss. You guys feel me when I say stop loss and like why they're important and why you might want to automate it?
I feel you. I need to start doing it. I keep saying I'm going to do it and still haven't, but I need to.
Yeah.
I need to start adding that towards my repertoire.
Yeah. But
what I did do, been doing better is buying down, either buying down or going with the wave, because I'll be doing day trading, so I just go with the wave.
Yeah. But I just keep a stop loss even on options. Like you can set stop losses on your options too, and my stop loss is typically 25%. So I'm willing to lose 25%. But then in addition, what I've been doing recently is, but when I'm up 25%, I sell a piece of my position. If I'm willing to get out of a trade at 25%, if I go up 25%, especially because we've been real choppy lately, like let's say if I buy 8 contracts or something, I'm gonna sell 4 when I'm up 25%, or I'm gonna sell if I bought 3 contracts or something, I'm gonna sell 1 when I'm up 25%, and then put the other 2 to break even, so that I guarantee that I get a winner. You know, but just things to kind of mitigate loss in these markets that have been real choppy lately. Because even if you look at Airbnb, it looked like it was taking off and then it got choppy and came right back down. You know, so HubSpot did that the other day too. So just to make sure, hey, am I making some, especially off day trading and swing trading, not necessarily like a longer term leap or an investment, but if you're day trading and swing trading, like take some profit at the place that you would have stopped out at. So that way your trade is definitely a winner. That's what I did on Nvidia the other day. It got back up to I hit my 25% mark, so I sold a third of my position. Then I got stopped out on the second and third portions of my position, but I made $250 that day. So I made $250, but got stopped out of everything else. XLK kept going. I had an XLK trade, and I sold off a third of it at 25%, but then it kept going. So I'm still in 2 legs of that position, and I'm at break even. So that's going to be a guaranteed winner of a trade for me now, because I'm already at break even from my stop loss standpoint, right? Um, and I'm already up a couple $100 off the regular trade. So, yeah, and now I'm glad I looked at Airbnb. That's a target for me right now. Right? It meets all the requirements of my trades. Specifically for a leap. I don't know. I remember looking at this a while back and the leaps weren't liquid. I know we're kind of getting off track. And they are still not liquid. So I probably would still buy shares of Airbnb. All right, so that was trade type number 3, stop losses. It's not really like a trade type. It's more of like once you're in a trade, which you should be setting. And here is, so let's look at Airbnb. This is a perfect stock to do this at, right? So I told you I want Airbnb if it gets down to like between 146 and 144 is the range that I'm trying to catch Airbnb right now. So let's say I I wanted to buy it at 145. Let's split the difference. And I want my stop loss to be just below 140. So let's say make that at like what's the bottom here? 140. Let's make the stop loss at like 140.45. And let's say I want my first target to be at 155. So how could I set that up and kind of automate that? What I could do is I could click here again. I can buy custom. Well, let's go first with this. Let's say I just wanted to put a stop on it at the same time that I buy it, right? So I could buy custom with a stop, right? And what that's going to do is going to give me a first triggers all or first trigger sequence, right? And these are essentially the same thing, right? So that's the next order that I wanted to talk about is the first triggers the sequence, right? So what that means is if I wanted to buy 100 shares of Airbnb at 145, I could put that price in, right? And then if I wanted to set my stop loss at 140.45, I could do that, right? And remember, always change your stop loss to good till canceled. And then if I confirm and send that, now what do you see? You see a trigger here to buy 100 shares to open the trade if it gets down to 145. And then it automatically automates my stop loss. Sell 100 shares to close this if it goes to 140 and 45 cents, right? And then when you're entering your trade, and see, Isaac, this is what I would tell you to do now when you're entering your trades, if you forget to put stop losses on your trades, why don't you put stop losses in when you're buying? Make that a parameter. So I already put my stop loss in before the trade even triggers. You see what I just did?
Yeah.
So then you don't forget to put in your stops if you make it a requirement to put in your stops when you buy in the first place. So here I already have where I want to buy it at 145 and I have where I want to sell it. I already put that in. So when this triggers, this order is just going to sit out there until it hits that price. It may not ever hit that price because it could go up. But if I know that's my worst case scenario and I don't want to forget to put in my stop loss, I could put in my order and my stop loss at the same time. So if I cancel one of these, it should cancel the other too, right? Cancels both of them when you click on the X. So another way to do that, if you just wanted to click buy, right here, you'll see down here in this tab, do you see where it says advanced order? Can you guys see that?
Yeah.
So right here it says single order. That's the standard order. But if you click that and go first trigger sequence, then right click that and then create an opposite order. It's the same thing, right? What I just did. 145 is where I want to buy. And if I wanted my stop at 140, 45, change this. Make sure your order is proper. Make sure it's a stop loss order. And then good till canceled. Put it in. And you'll see it on your chart. If the price drops down to 145, it'll buy me 100 shares. And then that's going to trigger this to be an open order where it's going to have a stop loss on it until it hits 140.45, and then it'll get me out of the trade if I'm wrong, right? Now, taking that one step further, if I wanted to have a target at the same time, so these are the three things, and this is the fifth order I'm going to talk about. It's going to be the first triggers OCO, which is what we went over earlier, an order canceling an order. Before you enter any trade, specifically as a beginner trader, you should have three things in mind. At what price do I want to get in? What's my trigger? At what price do I want to sell if things go wrong, which is my stop? And then at what price do I want to sell if things go right, which is my target, right? And if you don't have those three things before you enter a trade, you're entering a trade wrong, at least in my opinion. You haven't done your research, right? So let's just look at Airbnb. So I know I want to enter at 145, approximately. I know I want my stop to be below 140.50. And then I'm looking at the most recent high on a day chart. It's at 155.66. So I'm probably going to want to exit on a target one at around 155. So if I wanted to program all of those numbers in, I could click the price, buy custom with an OCO bracket. And what you'll see here is that now the advanced order is first triggers OCO. So you could do that manually as well if you didn't want to just click on here and then buy custom. I usually buy with the custom just because it'll quickly enter these things in, right? So if I wanted to buy at 145, I'd enter that there, right? And if I wanted to sell for a target one at 155, I'm going to enter that there for a limit order. And I'm going to change that to good to cancel, right? And then if I wanted my stop to be below this candle here, then I'm going to 140.45. And then I'm going to make that good till cancel. And if I put that on the chart, it's going to give me these brackets. Right? You see that? And then it's automated.
Yeah.
It's automated now. So if it gets to 145, enter the trade. And then if it goes below this number, sell everything and cancel this order. If it goes up, sell for a profit and then cancel this stop, right? And then it's automated. This is also a way, Isaac, for you to keep yourself trained on the upside. If you said, hey, I want to hit this target before I sell, but let's say you get up $200 and you're like, man, that's a good profit. Let me just get out. You know, this will also keep you. Uh, this will keep you like consistent and disciplined if you enter in your target to sell ahead of time. So you said, I don't care if this state goes up here. I want to wait until it hits this number before I sell, right? And the reason for that for me is there's two highs, high right here, and there's a high right here on this day. So chances are it looks like everyone's selling a little bit after it hits 155. So I want to sell before everyone else starts selling, which is why I picked 155 target. Now me, I probably wouldn't enter this trade because I would probably only sell half or a quarter of my or a third of my position when it hits this particular target. But if you're day trading and you want to be out before the end of the day and you just only got one target, you could input that ahead of time, you know? So then you don't have to watch it. You don't have to watch it when it hits your target at 155. You don't have to get on and sell. You can automate that it's going to sell once it hits that target. And it's going to sell if it hits the target to the downside, right? So this way you can kind of control your risk a lot more. And if you cancel that, it'll cancel the entire trade. If you cancel the trigger, right? And so let's say if I wanted to do this in different tranches, and I'm going a little bit further with this one, but let's say if I wanted to do an OCO bracket, but I wanted to do first triggers 2 OCOs, right? So I could do create duplicate order and create duplicate order there, right? Do you see how now I have 5 separate orders up? Let me move my screen. 1 to buy, which is my trigger. 2 to sell. 1 is a sell stop. 1, and then another one that's a sell, and then a sell stop. So let's do this one. So let's say if I wanted to get in at 145 and I wanted to sell half, so 50 shares, if I'm buying 100 shares and I want to sell half, if it hits my first target, which is 155. So I put 155. Bam. And my stop loss is going to be, what did I say, 140.45. Then I'll put these good till canceled. And I'll put this one good till canceled. And then I want to sell the other half of my position if it gets even higher. So let's say my second target is, let's say 167. Then on the second order, I'm going to put 167. And then on the next 50 shares, same stop loss, 140.45. All good till canceled. Now when I enter this, I have 2 brackets. You feel me? You could do this with options too, Isaac. So now I enter if it hits 145, right? And then if it hits target 1, which is 155, cancel stop 1. And then I'm going to still have 50 shares. And then if it hits target 2, cancel stop 2. And then I'm out of the trade. And this is a way where I could have multiple targets, and you can do this with 3 targets. Do they have one with 4? I don't know if they have one with 4. I know they have a OCO 2 and an OCO 3. So you can do this with multiple targets where you can enter at a particular position. And this is almost like you creating your own bot, right? You feel me? What I mean by that?
Yeah, I do.
You could be off. You could be on a plane, not have Wi-Fi connection, and you could be trading because when this hits this level, it's going to trigger. and then you could be safe knowing that your stops are already put in, and then you have a target one, and you got a target two for a runner, just in case it hits this, right? And all programming in at the same time. So this is what I would say, Isaac, I would start telling you this is a way to kind of be more disciplined to where, hey, if you knew you wanted to take your options and get out if you hit 25% on your target, get out a half of your position. Get out a third of your position size, you know? And don't sell the whole thing at that first target, sell half. And then move your stop from here up to break even. So then you're just playing with house money. So if something wants to run to the moon or there's some good news that comes out on your stock, like you can let it go to the moon and still feel comfortable because you got your stops programmed in. You can move these to break even. Worst case scenario, you're going to get out of that trade for less than a few bucks, losing a few bucks. But best case scenario, you can get all of this up here, you know, if that's where it wants to go. And that's exactly what I would be planning on doing if I get into Airbnb. And for me, I actually like doing thirds now. So I probably would make that first target 33 shares, the second target 33 shares, and then the third target would be probably closer to 190, would be another 34 shares. And then I would have three separate stops: a stop at 33 shares, a stop at 33 shares, and a stop at 34 shares. But then I could just program everything, you know?
Nice.
All right. So that's pretty much it. Those are the 5 different order types that I wanted to go over: market orders, limit orders, stop losses, a first triggers a sequence, and then the first triggers an OCO or order canceling order. And these are ways where you can kind of build your own trading bot inside of ThinkOrSwim, where if you're on the move, you're sitting in traffic, but you knew you wanted to buy Airbnb when it got to 145, you don't have to worry. You could just set it and kind of forget it, you know, for that day. I generally will only, my buy orders are only going to be in force for the day. I'm not going to set that to good till cancel, right? Because generally, like, this moving average is going to move up or down the next day. So I might want to recalibrate the next day and put in a different order the next day. But if it's close to my trigger, like where Airbnb is already close to a trigger, I might just set an order out there and then program it like this to where, get me out if this happens, get me out if this happens, you know, and just leave it at that. And then it's going to keep you disciplined. If this is how you wanted to execute your trade, for me, it's not so important that I lose my trade. What's more important to me is that I did what I said, what I wanted to do. Because if you win on a trade but you're not following your rules, like, you don't have any rules. So how are you going to replicate that? You know, you can't replicate something when you're just like deciding what to do today versus tomorrow. Like, no, my strategy on longer term plays like this on Airbnb is to buy stocks close to the 200 moving day average or exponential moving average. I have a stock that I'm interested in that I like long term that is on discount, is more than 50% off, and it's close to the 200 exponential moving day average. That is my strategy. And I usually tend to set my stops below the most recent low, which was around here on this candle. So that's what I'm doing. I like to set my first target at the most recent high, which is right around here at 155. And then I like to keep a runner. So that's the most important thing for me, is to execute my strategy. So if I automate this, it takes all of the emotion out of it when Airbnb is going up or down or up and down. Just execute the strategy. And as long as I execute my strategy, even if I lose, that was a good trade because I followed my strategy. Most people F up and they don't follow their trading strategy. And then they say the trading strategy doesn't work. No, it's not that the trading strategy didn't work, it's that you didn't follow the strategy.
Yep.
So
Yep.
that's what it is most of the time. So using automated tools inside ThinkOrSwim can help you take the emotion out and just set it and forget it, right? If that's what you want to do. Or instead of doing these, you could set alerts that have you sell. If you want to be more precise and want to enter and exit at more precise positions, then you could set alerts. But if you don't have time throughout the week, which a lot of us don't, you can kind of set it and forget it, where it'll take profit when you want it to take profit, and it'll cut your losses when you want it to cut your losses. But these are the ways to do it inside of the platform. Um, and I think, yeah, let me cancel this. All right. And you'll see the alerts come up when you cancel. If you cancel the trigger, it'll cancel all of the subsequent trades too. Right. So that's and then once you kind of get the hang of all of those different orders, you could enter your trade and just buy initially, right? And then once that one is entered, then you could set up an OCO order separately instead of a first triggers OCO. But these are kind of all variations of the things that I just showed you in terms of different types of orders and why you would use them or why you wouldn't use them, and those sorts of things. So with that said, I will end for today. Any questions on what we went over?
I'm good. That was a good game.
Right, DeAndre. I don't know if you left or not. Any issues?
Good as always, man. I appreciate you.
Yeah. All right. Well, that's it. Mokama Sunday service. Until next week. You guys have a good day out there. Good weekend. Rest of your weekend.
Appreciate
You as
you.
well.
Appreciate
All right.
Peace.
Peace.